Welcome to ECNTRADE daily video. Before we begin, it should be noted that any advice is of a general nature only and that your personal circumstances have not been taken into consideration. Hello everyone, my name is Rob Clayton and thank you for joining me. The Australian dollar currently has recaptured renewed momentum in the Asian session as the US dollar slowly eases down towards the region of 102.30. While offshores, markets were slightly eased by news that the First Citizens Bank shares said it would take on its entire loans and private deposits of failed Silicon Valley Bank, while in Europe, concerns about Deutsche Bank have also calmed down as well. In economic data, Australian retail sales grew by 0.2% in February, on forecast, that is, of 2%, and according to the figures released by the Australian Bureau of Statistics, this was a slightly higher gain in January from 1.8%. Looking ahead to this Friday, we get the release of the US Fed's preferred inflation gauge, which is the core personal consumption expenditure price index. Markets will no doubt be a little bit whippier from the release, and also given the fact that the Fed has left the door open for a possible 25 base point rate hike as the concerns of the banking sector slowly calm. So no doubt this is a key point to the Fed's inflation gauge. So let's see what the numbers are on Friday. So looking at the top side of the range, we can see that 66.95 is in focus after recently rebounding, but towards the top side of its range, no doubt there will be some hesitation towards 67.35, and another rejection would expect to see the market fall back towards the key level of 65.95 is where the base is. Looking at the euro, the market is looking a little bit more firmer into today's price action, and along with that, let's see if the bulls can actually take the move up towards the region of 108.60-65, where I feel there is a bearish ambush awaiting. If so, this would see the market tumble all the way back towards the key support level of 107.35 and reassess from there. It is a key point, as a break would give further exposure down towards the 105 area. With weak technicals, I feel that the bears may get the upper hand and see this turnaround sharply in place. The dollar yen price action is slightly weaker, considering that the dollar is slightly eased, but the bullish divergence is still there. And along with that, with the dragon doji, I do expect to see the market for the dollar yen increase back towards 131, with the objective holding at 132. And as I mentioned, any further downside tests should find another bullish response. A slightly firmer price action for the pound as it now looks back towards the 123 area, and no doubt be a little bit hesitant as there was an ambush previously above this level, and no doubt another one is waiting. With weaker technicals and some divergence there, could see another down test and look back towards the 121.85 level. Having rejected the top side around $2,000 an ounce for the third time, the market is now weaker into today's session. As it reaches its objective of 1,960, could see further weakness into today's session and look towards the target of 1,935 with any upside attempts to be limited. After posting the Dragonfly Doji as well, the market has found renewed momentum and now claims the region of $72 a barrel. That could see further scope up towards 74, given the fact that the technicals are relatively firm, and then reassess from 74, 45, 65. Any pullback, I expect to be shallow. Well, that wraps it for today. Thank you very much for joining me, and as always, look out for the intraday report, and I hope you enjoy the rest of the day.